Hey, Jacob, it's great to have you here, and I'm grateful to talk with you about what's going on in the markets. And I'm curious to learn what you think about geopolitical turmoil and investing in these times. So let me know what your thoughts are. I'd love to talk with you about a number of subjects that I'm excited. We're both really into personal finance and investing.
Thank you. Yes, it's great to be here. Yeah, I was talking about the how the war in Ukraine and how that will affect the US economy and the equities market. So when equities go down because of growth expectations, they fall to the greater likelihood of easing them. And then the bond market goes up, the commodities will increase, and it leads to higher prices. So what's
Yeah,
your opinion on that?
yeah, for sure. I mean, I've been seeing a lot of higher gas prices, so it definitely hurts there. And then there are a number of economic indicators I've been seeing that the more that we have, say, economic shocks like oil shocks, that is correlated to a recession potentially happening, as well as the bond yield curve from US Treasury bonds potentially inverting because it's been rapidly flattening. And actually, some of them have started inverting. I want to say maybe the 3-year and 10-year bonds may have already slightly inverted, but not yet the 2-year and 10-year bonds. So that's something to keep an eye on because if some of these factors keep showing that there's kind of trouble ahead, that might cause a lot more volatility in the markets, like you're saying. And what do you think about commodities? Like, do you think there are some potentially good investments there, or what have you been looking into with commodities?
As of right now, with the markets how they are, and with the war going on in Ukraine, the market's volatile. It's always hard to say with commodities, but every time the US goes into a recession, commodities always increase, which gas prices have been very high, all went over $104 a barrel. Since the 1980s, every time oil has went over $104 a barrel, US has gone in a recession. So
Hmm.
it's very interesting to think about. Nickel, copper, they've all skyrocketed, crazy numbers on them. And a lot of it is due to the supply chain issue, but I believe we are going in a recession.
Yeah, and it's possible we might already be in one because sometimes whoever the powers that be, like the National Bureau of Economic Research, they might not call the official recession until we're well into one. So sometimes they only, I think I read that they might determine one maybe like, 6 months to a year after we've already been in kind of economic decline. And I had read that the original definition of a recession was two down quarters of GDP. So the thing is that definition has sort of changed because what we saw in 2020 was that we had like maybe one of the shortest recessions ever of like 2 months. And by April, we
Yeah.
were already sort of starting to open up and get better again. But then it's sort of curious about the situation now. It feels like things are going to be drawn out longer because it's still, I feel, in my opinion, in kind of the early innings of the Fed raising rates. And if you notice what happened in Q4 2018, that's when rates seemed to reach a high enough point when markets started freaking out. And they didn't freak out in Q4 2015 when the Fed first raised rates, but it took some time before, whatever it was the needle that broke the camel's back, maybe if the rates were too high and then debt cost too much. And then that put a bit of a dent into corporations' plans for, either expanding or adding to their payroll. So maybe some of those factors will take time to play out. So even though it's possible we might be in somewhat of a decline right now, I mean, it's anyone's guess. Like I'm not claiming to know, that, like, I don't think that I necessarily know what will happen. I'm just trying to be educated about some of these economic things going on and try to make some guesses so that hopefully I can position my investments in a way that hopefully I can do well over time. But some of these macroeconomic things, even though they're going on, what I've learned is that the best investors don't really pay too much attention to whatever the Fed is doing or where interest rates are, or how strong the dollar is or isn't, and stuff. They just invest depending on what are the best businesses that they know and can predict what their future cash flows might be. And then they go forward, like how Warren Buffett has been heavily investing in Occidental Petroleum. And also, he recently had Berkshire purchase Allegheny Insurance. So, in spite of all the things going on with a lot of uncertainty and volatility, Warren Buffett isn't afraid to make investment moves. So, I think it's very interesting. And I think that even though people might not feel super sure about how they should invest right now, I think if they study businesses that they believe they're capable of understanding, then they're closer to being able to invest in those companies if they figure out a good buy price. So that's what I'm trying to do in trying to like kind of figure out cash flows and then growth rates of where I think companies can grow their earnings or free cash flows to, and then hopefully make educated decisions about investing.
Yes, and like it's also very hard to time the market on these certain areas. So, like I said, and we don't know what's going on with the war.
Mhm.
They could pull out or they could go on through Europe. It's kind of a gamble in that sense because we can't say what Russia's going to do.
Mhm.
But I do say, as long as you're in the markets and you're in it 15 plus years, you're always going to be ahead. That's been proven since 1929. So that's where I come from on that point. So it's kind of iffy around these like political stances with these bigger countries.
Yeah, even though it's iffy, like you're making a good point about how we will generally do well if we're invested, hopefully in the best way that we were able to figure out. Like we've reached our own conclusions about asset allocations that hopefully align with what we believe in, and that we think, after reading prospectuses or annual reports and learning as much as we can about potential investments, then hopefully most of them will do all right, because usually they've generally done better over time, like you said. And even Warren Buffett says, never bet against America. And I think that's an important point, because no matter what bad stuff happens, as terrible as it is, and my heart goes out to the people of Ukraine, and I really hope that they will prevail over their aggressor. At the same time, we need to just find a way to move forward, because if we're afraid to invest and think that the markets will crash, that actually should be a signal that people should want to be investing. Because if we think about this in our normal everyday lives, like let's say you go to a grocery store, are you more happy or less happy when something that you want to buy is even cheaper? And I think most people would agree that if you see your favorite food item on sale and it's 50% off, you want to buy more of it, not less of it, right? So
That's true. And I 100% agree on that aspect. It's good to stay in the market consistently rather than get scared, maybe pull money out, because you're always going to lose money if you do that. So a constant investment every 2 weeks or a month, I mean, even every week, into the markets. I honestly really like the broad markets because you're historically always going to be up after every recession or depression.
yeah, and I mean, hopefully they do well. Like I know Warren Buffett has said, for most people, the S&P 500 is more than good enough. And over the last couple of years, you couldn't help but do well. So a lot of people who were not maybe in the S&P 500 maybe didn't do as well. And so it can be helpful. And the only thing that I would place as a caveat is that it seems like market valuations are somewhat high. Like even though they went down a little bit recently, they're still sort of close to some of their all-time highs. And there's a couple of indicators that I've followed that make me want to, just be a little bit wary, because if we could be sort of at like all-time market highs similar to the dot-com bubble, like I'm not saying we're necessarily equal to that, but if we're anywhere sort of closer to that than we are at the market bottom, then if we look at things like the Schiller price to earnings cyclically adjusted ratio, which is known as CAPE, that's been pretty high, like in the high 30s, and it's even reached above 40. And during the dot-com bubble, it was at 44. So we're really close to that. And also, if you divide what your expected return is, like say 1 into 40, your expected return, then it might only be 2.5% compared to if markets were trading more at their historical average of 16, then you can expect the normal market returns averaging about 7%. So I feel like it's a little bit tricky. And the other indicator is the Buffett indicator, and that measures the total market to GDP. And that's also been well above historical averages. So it feels like we're a little bit at crossroads. Either some of these indicators are no longer applicable, like maybe we've reached a new normal where valuations will always be somewhat higher, or maybe things might reset and regress to the mean. It's kind of hard to say because, just when we think this is how things are and they're going to be like that, sometimes they change when we don't expect it. Like, I don't know if you know the concept black swan. Have you heard that from Nassim Nicholas Taleb?
I haven't. Yeah.
So a black swan is an event that a lot of people might not foresee, but it's like a one catalyst event that happens that really changes things in the market. So black swan events could be like the things that happened during the Great Recession, like the falling of some famous banks or insurance companies. And those were like black swan events from all the subprime mortgages and also the collateralized debt obligations and other things that went on during the Great Recession that caused a lot of the pain that happened. So those were sort of black swans that, even though it was hard for people to predict that that was going to happen, when people look back, we sort of have this hindsight bias where we think, oh yeah, that makes sense. Like anybody should have seen that coming with the housing going up in the 2000s. And then we should have seen that something like this was going to fall apart. So even though nobody knows necessarily what will be like potential future black swans, like nobody could have known what we went through in the last couple of years. Nobody could have predicted that black swan event, but it happened. So we're always like, trying to just figure things out. And, I think it's great what you point out about staying invested. And I would like to do that as much as I can too. I'm holding some cash, but some of it I'm sort of trying to reserve for hopefully a better buying opportunity, because some of my favorite companies that I'd like to buy, I don't feel like are quite yet on sale enough. So if I'm lucky, I'm hoping I can get them 50% off on sale. But if not, I might have to settle for, if they come down maybe 30%, maybe then I'll jump in a little bit. But I've been sort of holding out a little bit because I'm expecting that with interest rates going up, that markets will kind of go down a little bit. So I'm just hoping for that, but I'm hoping in general over the long term that the markets will go up over time, like we talked about.
And I think it's always good to keep a safe, well-balanced portfolio. It reduces the risk without reducing your return.
Yeah, well, and it's good to have uncorrelated assets, right? If possible.
Yes, that's true. And the U.S. bonds. So give your opinion on the U.S. bond.
Well, I just feel like with interest rates so low on US bonds, it just feels like a waste of allocating capital. Like I know it's tough out there. There's not many places to get returns. So there's really not many places you can hide. I mean, maybe the best are being in equities and businesses, like this investor that I study and admire, Guy Spear, said. So it's good if you have your own business and you can generate cash flows, or also invest in equities. And, for that, I would choose wisely which kinds of equities you want to be in. Like, it's not good, in my opinion, to just kind of guess. I made the mistake when I was younger of just investing in some companies because they gave dividends, but I didn't understand these companies. So I didn't understand why they were going up and down. And even though I got a little bit of a dividend, my stocks also didn't go anywhere. Like their stock price barely moved in a few years. And I just thought that this was kind of lame. So I suggest that people not do what I did in just buying any security. You should hopefully study what kinds of assets and read the prospective and annual report, and hopefully come to a good decision about, what things you're comfortable with and which things you can sleep well at night with. I recommend people not being invested in stuff that makes them feel nervous, and that they're always checking their phone and brokerage and constantly looking if it's going up and down, because that's not healthy.
Yeah, and I always say that I'll take a growth stock over a dividend stock any day. But like going back to the bonds, it's becoming unattractive to own the US bonds, which back in the 50s, 60s, that was the thing. That's what you would invest in. That's what made you some money. It was the US bonds. And times have changed. And there's like a supply and demand problem on the US bond because a bond is a promise to receive this currency. But back in 2020, when we printed a lot of currency, 30% of the currency that was out and passing through the country was printed that year. So that's why not a lot of people are investing in the bonds because of that. There's just not enough of demand there. There's like a need for more monetization of that debt that we've created on the US bonds.
Well, and do you think if interest rates go up, that will help spur more demand in them again?
So it's always interesting talking about that because when you devaluate a currency, you reflate the economy, which is crazy to think about. And that's what I got from Ray Dalio. And he studied that all the way back from 500 years ago,
Hmm.
from the Dutch Empire, the British Empire, and what's now the US led dollar. And it's really anybody's game on that. But I really don't think the bonds are a good investment, even though the interest rates are going up. A lot of people have distrust in it. And that's why we've seen Bitcoin skyrocket
Right.
because
Hmm.
a lot of people thought the US dollar was going to fail. So they were investing a lot. Bitcoin shot up to $60,000 per coin, which is crazy.
Yeah, that's a good point. And you're right in these bigger trends going on where people might be losing a little bit faith a little bit in the American monetary system. And, if there's not many places to put your money that earns a respectable return, then people might be willing to try out things that they're not as familiar with and try out something new where, like, I've heard people say something like Bitcoin has been one of the best performing assets of the last decade. Charts will easily show that, how well that crypto has done and maybe others. And the other thing I want to say with bonds is I noticed that there's something I think called tips where it's sort of inflation protected. And there's one that's, I want to say the Series I, which is the one that gives you about 7.12% of a return, but that's only for a certain period of time. And I think that might be changing this April or May 2022. And then they're probably going to adjust the inflation bonds to give you a higher percent, maybe, since inflation seems to be still going up and not yet down. So maybe who knows if like those inflation adjusted bonds might go to giving you a yield of 7.5%. And while that sort of seems attractive, like I've seen some buzz about it, but there are some caveats to investing in those bonds because they're sort of variable interest. And if you commit to that, like you have to commit for at least a year. And if you don't commit for something like at least 5 years, then some of your return will be deducted if you cash out of it before like 5 years. So that's a little bit of a risk with some of these Series I bonds is even though it seems attractive to get right now a decent rate of return, which is sort of matching with inflation, not 100%, but it's almost matching. So, it's maybe better than others, but at the same time, if the variable interest rate, like let's say in a few years, if it goes back down to like 0.1%, then your money will be losing more than how much you initially got. So that's the only thing I want to point out about people could get into some US bonds, but it's sort of hard and you have to really know what you're committing to before you just buy any of them.
That's true. And talking about the inflation's still rising. Last month, it came out that inflation was at 7.1%, which is insane. And going back to the monetary policy, when interest rates were dropped to 0% because of COVID, they were trying to get people to buy. There was a lot of monetization there. The last time that happened was between 1930 in 1945. And the US was going through a lot during those times. I mean, we were experiencing a war,
Mhm.
and history tends to repeat itself.
Yeah, right. And actually, it's interesting you point that out because some articles I've read are saying that the inflation we're seeing now is not as much like the 1970s. It's a little bit closer maybe to the 1940s for exactly the reasons you pointed out. And I actually tried to graph a chart of some of the interest rates and sort of the market performance, and they seem to line up pretty well to that sort of 1940s, 1950s area where when interest rates started going up after the war, then markets actually dipped a little bit before they continued going up in the mid 50s. So we might see a little bit of a dip again. Like, I don't know how much of a dip it will be, or maybe it bottomed out already if the S&P 500 bottomed out around 4,200, who knows? But it's interesting to me that you said that because I've been seeing some signs, and I'm sure Dalio has talked about this. Like, I have yet to read his Changing World Order, but from what I've heard about it, there's so much wisdom to learn from Ray Dalio and a lot of his books. And I read his first books on principles and how he's all about radical truth and transparency, which I think is really great. And I think that how they do things at Bridgewater Associates seems really great because they put it out in the open. If anyone wants to challenge someone else's ideas, they are free to do so without, bad blood or
There,
anything like that. Yeah, I think it's really good how they're trying to make things like more of a merit-based system like that because it doesn't seem as common to have that kind of working environment. So there's something interesting to study about the culture that Ray Dalio fostered at Bridgewater, and hopefully, other companies can learn from that too. And we as professionals in whatever careers we're in, hopefully we can also learn and apply the lessons that I think Dalio has been very successful with, and I think it can go a long way with helping all of us.
yes, Ray Dalio is a very brilliant guy, and the 1933 period with Roosevelt, I actually heard this one from him first. So Roosevelt was doing the same moves in 1933. The assets were rising. Their alternative storehold, like the storeholds of wealth, was changing. And then we got to Nixon, and Nixon came back and he announced that we were coming off the gold standard.
Mhm.
So what what would you think? The markets would go down. But he said when you devaluate the currency, you reflate the economy. So you're sacrificing a lot of his debt, which is very similar to what's happened here recently.
Mhm.
So a lot of that's resurfacing, and you're sacrificing all that debt for hopefully a better economy.
Yeah, and I mean been a big boost. Like, I think a lot of investors agreed that the Fed did the right thing and all the money printing, and like it wasn't just only the Fed but also the fiscal stimulus from Congress that also pumped a lot, and the combination of that. I mean, I've heard something like 80% of all the money that's ever been printed happened in the last couple of years, and that's incredible. If it used to be something like $4 trillion and now it's $20 trillion of money potentially circulating in the supply of money that we have in the US. And if there's that much money, it's no wonder that we're seeing as much inflation as we're seeing because our dollars became worth less in order for more people to be able to get jobs again. So it's sort of a double-edged sword. Like, it's good that it helped companies, restart operations and then hire people back again, and people got jobs again, but it's also been tough because now people really want higher wages now that they know, bread costs more, milk costs more, everything costs more that we normally buy. And it might be leading to something else people are sort of likening and comparing to the 70s when they had stagflation, where we might have a wage price spiral. So we might see some of that too, where people are going to demand higher wages now that their money buys less. And maybe it does take higher interest rates to sort of stamp down inflation, like what Paul Volcker had to do. And we had actually back-to-back recessions in 1980, and then again from 1981 to 82. But that seemed to kind of mostly do the trick of getting rid of the rampant inflation that we had in the 70s. And Jerome Powell might have to kind of step up and do something similar, as much as it nobody likes for their wealth to kind of go down. Like, so if we're all used to looking at our stock portfolios and we think, oh, it's in the green, it's doing so great. But then as soon as the Fed is like, okay, well, things are getting more normal, you guys have jobs again, so we need to raise rates in order to, make it so that your money can buy stuff better and that you're not just having a devalued money. And so it's sort of tough. And I fear, unfortunately, when they raise rates, then companies will be expanding less, and then they might have to lay off some people. So that is potentially part of the harsh reality. But hopefully, if our economy is strong enough, that hopefully not too many people will lose jobs, but that people can still mostly stay employed. I think that's what the Fed is trying to maneuver to next.
Yes, I completely agree. And it's crazy that we have to do certain things these ways. But then again, if we don't do these things, our entire economy will fall.
Yeah, like we don't want to turn into like certain countries that just money printed. Like, can you imagine if the US ever got to a point of hyperinflation like what's happened in Zimbabwe or Argentina?
Germany,
It would be terrible if that ever happened to the US.
yes, like in Germany after World War II, they had hyperinflation. It was crazy.
Yeah, and I think it was also
But
leading up to it too. I think it might have even started in World War I, I think, like where there's like a picture of someone with a bucket of money to buy like a loaf of bread.
yeah, bringing the wheelbarrow full of money,
Yeah, sorry. Yep, that's the one.
which is crazy. And see, that's what's leading people to crypto. Not a lot of people have trust in the US dollar. They don't trust the US government. They don't trust anything about that's going on in the US. So they're turning to cryptocurrency as a way of getting away from the system.
Hmm.
And the blockchains, honestly, Bitcoin's anonymous, and people have really made Bitcoin go up.
Yeah, and I can understand from watching some documentaries and reading some articles about why there's a lot of appeal about it, because if you have a devaluing US dollar, you can maybe exchange that for certain cryptos that you think might have a chance for going up or being a hedge against inflation, right? So I can see the rationale of why people might be going into some crypto. And like, what do you find interesting about it? And like, where do you study in the world of crypto, and like that helps you make your conclusions about it?
So it's hard to say right now. I do like the blockchain. It's fascinating, but crypto isn't a security, so a lot of these pump and dump crypto scams are out there, and people that really don't know much about crypto,
Hmm.
it's best to stay away from it, because if they get involved with a cryptocurrency that just a pump and dump and they lose all their money, and they just have the wallet IDs, they don't know who actually pumped this currency, and they can't really go after it. So that's a iffy stance to go in right there. But if I talk about the bigger ones, the ones that who the founders are, what they're trying to do with that coin, where they want this coin to be in the next 10 to 20 years. They're trying to build up a foundation from these coins. And Ethereum, Vitalik Buterin, Charles Hoskinson also founded ADA, Cardano. I'm a huge fan of Cardano. I think Cardano is one of the coins of the future. They're doing lots of stuff with it, and it's going to be one of them economic coins that they're developing software. And I see a lot of potential in that coin. Also, Ethereum.
Oh,
Ethereum is
that's
great.
cool.
There's high gas fees in Ethereum.
Hmm.
So Charles Hoskins actually made ADA Cardano off of the Ethereum chain. He made like his version of it to try to eliminate what they made a mistake on in Ethereum. So if I create something and there's flaws in it, and I create another one that's very identical, but without them flaws, that one's a step higher than that. And they may come up with another one after that that's a lot better than both of those two. And
Mhm.
it's just hard to say from there. But yeah, I do think that those are some good investments. Stay with stuff that's known. Don't go with anything that's risky that could be a scam.
Yeah, for sure. And I think blockchain technology is also really fascinating. And I've heard, decent things about some of the top ones like you talked about. And it's really interesting to see what the potential could be with smart contracts and the software built into some of the cryptos, that it has the power to do more. And what I'm hoping for is that, companies can also leverage blockchain, because in some ways, what I've also heard it described as is that it's a more secure kind of database. Like, I know a lot of blockchain can be kind of a buzzword, but it boils down to being a better version of a database. And I think that that has a lot of potential for, big data analytics and companies to hopefully use blockchain tech to do good for the world, so that it's has a really good purpose and helps do more things efficiently. Like, sometimes I wonder, why does it sometimes take months to sell a house? And can maybe blockchain tech help with transferring deeds to people more seamlessly? And maybe some real estate agents might lose their job if they don't really have as much of a purpose. If maybe blockchain tech alleviates some of the need for middle people, who knows? Like, there's such a big world out there, and I can understand why there's a lot of excitement with blockchain and crypto. And I just haven't invested in any crypto because I don't know like which kind of cryptos might win. Like, some people I've heard describe that, you should only be willing to invest in some of these if you're willing to have your money potentially go to zero. Like, hopefully it doesn't, but that's a potential reality, because what if there is something that comes along that's better, or some world governments outlaw some of the cryptos, and then it might not be able to be used in your home country. And so, like, there's a lot of questions about the legality and the regulatory environment. And I know the US is very friendly with crypto, and there's been some newer maybe regulatory developments that, they're trying to be more open with crypto development. So hopefully that's a good thing for innovation and being able to advance like a lot of the good work that's been going on in blockchain. And the only other question I have with it is sort of the environmental one, because I've heard that certain cryptos take a lot of energy. And if they take a lot of energy, we want, the world to be sustainable, hopefully, and the environment to be preserved. So how can crypto achieve the aims that it seeks to do, like make things more efficient, like transactions, while also, preserving the environment? Because right now, depending on which energy source it comes from, it's not always the most sustainable use of energy.
Yes, I agree. And that's what they're working on now. And also the Ethereum's high gas fees and everything. It takes a lot to mine crypto, and we're in the early stages of it, honestly. And I think there's a lot to grow, a lot to learn from crypto. And we're coming along with crypto, but we're also learning about it as we're using it. So we don't know everything that's going on, and that's really affecting a lot of the people that are kind of scared to get in. But I feel some of the bigger ones, if you stay with it long term and hold it long term there, they'll do good.
Yeah, and like you said, it's interesting with Cardano and Ethereum. They seem to have a lot going for them. And something that I learned about like Ethereum, I don't know what you think about this. I don't know if this is controversial or not, but I heard that there was some sort of issue called something like the DAO, and then something happened where a lot of people's kind of ether maybe was taken from them, but then I think they might have created a new fork in the Ethereum network to sort of be able to give people's ether back from the sort of maybe DAO thing that happened. I don't know if you've heard about that or what that might have meant, but I watched that in a documentary, and I was just sort of curious if, because there's things that I've heard in blockchain that it generally, you don't want to undo something that should be permanent on the ledger. So if someone technically took a bunch of crypto out of some way, then if you fork, I guess, the network in a way that says, just kidding, your crypto wasn't taken, here is it back? Like, I don't know, it's sort of confusing. So not a big deal. I was just kind of curious what you thought about it.
I'm not aware of the DAO. I'll have to research that, but I do know that there are a lot of, and I say the pumping up scams, yes, on the small cryptos, but on the bigger crypto scale, they'll have a lot of these wallets that'll come up on. You can find them on the App Store anywhere, because you can create you a wallet and make it for people to make their own and have their own currency through your system, through your app. And it's hard to say. I personally go through crypto.com. I do have a ledger, which is it's hard like currency. So once you take it out of your computer, that's it. Nobody could get in that ledger. But as of crypto sites can be hacked, and some of them will actually pull an exit scam, which has happened quite a bit in cryptocurrency's early stages, where the owners of these like wallet companies will drain the people's wallets, put it in their own, and then leave, go to a different country, go do something else, and the people can't get their money back because they had it in a sketchy area. As of if you stay in the big, like the main big named holders.
Mhm.
So crypto.com, that's what I use, and they're fine with me. I did have a problem with Coinbase actually.
Oh, really?
So yeah, something happened and they blocked my account or something, and it's hard. They don't have a customer service you can call, so you just have to do it over the computer, and it's difficult. I just had to create a new one,
Oh,
or a new
wow.
crypto.com.
Yeah. Well, even though that happened, sorry to hear. At the same time, another interesting thing that I learned from Guy Spear is that some of these exchanges or platforms, they might also be something to look into if they become publicly traded companies someday, because in operating this network of facilitating crypto transactions, that might also be a powerful moat, perhaps. I'm not sure if it is, but maybe also something to study about, with any network that can facilitate transactions like the Visa and MasterCard networks. When those companies came out, and I learned this from Bill Ackman, they have sort of an unlimited royalty on people spending money. So imagine, being able to invest in companies that, facilitate financial transactions, that there's no limit to how much maybe money they can make from customers who use their services. So potentially it could be a good business model. I'm not saying it either is or isn't, but maybe something to study in the future about some of these crypto exchanges, and see over time which ones might do really well and be trusted by people, because that's a big deal also, is how much trust your people have in you. And I know like Robinhood as a brokerage app has been running into a little bit of, kind of
Yeah.
iffiness with, you can see that in how their stock price has performed. Like they've had some issues with what their reputation is with customers. So you have to always do right by customers, because it's like what I've learned from Warren Buffett, where it takes a lifetime to build up your reputation, but you can easily tear it down with an action that's irresponsible. So you want to really work hard at having a good reputation, and not let anything come in the way of people questioning your integrity, because as soon as your integrity is doubtful, then people might not trust you as much anymore, like what I've seen kind of happen with Robinhood, unfortunately for them. And so yeah, hopefully they'll do the right thing and regain some trust with some customers that they might have let down before, like when some of the GameStop stuff was going down, and other stuff happening.
When Robinhood halted the trading on
Yeah,
GameStop.
right, exactly. Yeah, and I think also maybe with AMC, and also
Yeah.
the documentary that I just want to mention, where I got that, what I was mentioning with Ethereum, was from Cryptopia, and it was narrated by Torsten Hoffman. So I don't know if that was a decent documentary, but I learned a good amount about crypto, and a lot of the great potential in it. And the other thing that you mentioned about wallets is, like there's so many more secure ways to also have your wallet. Like some people have offline wallets, like so if they have hard storage, that might also be a way to protect what people's holdings are. And also one thing I read about in a newspaper article was about how some people's wallets were hacked when some hackers did like a phone SIM card swap. So somehow they were able to kind of fool like the telephone customer service that they were that person, and then change out the SIM. And then, your phone is what like you get a lot of security codes sent to. So if you're no longer in control of your phone number, then sometimes people can have their wallets hacked. So that's also just, another safety thing to keep in mind of how cybersecurity is so important. And it will be increasingly important for people to stay as secure as possible the more our money gets digitized in whatever form you have it in.
Yeah, that's true.
It kind of looks like the sun is setting where you are.
Yeah, I didn't have my light on, and it. I think that's all the topics I have. Did you have anything else that you wanted to talk about?
Well, I think that was a great conversation, Jacob, and I greatly appreciate learning from you about all these things. And I think it was really awesome to connect with you. And I wish you all the best in your career, in getting more into personal finance and investing. And I'm sure you're going to be successful because you're studying the right investors and you're open to learning and kind of sticking with things and trying things out. And I think that's super important, is to stay curious and to have belief in future financial markets. And I think things are going to be great in the future. So do you have any last words?
Don't panic sell. Time in the market beats timing the market, honestly. And yeah, it was great talking to you. Same to you as well. I wish good luck to you too in your future.
Thank you, Jacob. See you later.
Thank you. Have a good day.